Central banks around the world are printing $200 billion per month in an effort to keep the system afloat. They attempt to offshore their inflation by purchasing assets in other currencies. Every central bank is engaging in the same policies in this currency war. You came here for the truth. Today we are going to look at the Swiss Central Bank and their activities. This is confirmed information. This is not a conspiracy. I will show you the facts. I will show you the documentation. And then I want to connect that in with a few other points. This is going to be a huge video beginning with this. Back in 2016, we have this article out of Reuters. Swiss Central Bank steps up stock buying spree. So here it basically talks about what they're going to do, how they're going to increase their purchases, and so on. That's a few months ago. So let's move forward into the situation today. We look at this website, holdingschannel.com. And this basically takes the data and compiles it together nice and neat. And you will see the Swiss National Bank top holdings, which I'll, of course, put the link in the description of the video under the section sources. And you can see this for yourself. You could scroll through if you're interested. Apple, Microsoft, Johnson & Johnson, and so on, to the tune of billions of dollars each. Billions of dollars. Now, where does this central bank get its money from? Well, you and I both know that it prints it from thin air. Billions of dollars worth are being printed, sent offshore to buy shares of particular stocks. And this is just one central bank. They're all engaging in the same policies. So when you talk about the economy doing well because the stocks are rising, well, how do you explain this? How do you explain some of the biggest buyers in the world, the ones that print their currency out of nothing to buy the shares, and you tell me that everything is doing just fine? We have a difference of opinion. Well, this is holdingschannel.com. Who are they? How do I know this is legit? Well, how about this? SEC.gov. You can go to the government's own website and you can see it for yourself. Form 13F. This is the official documentation, shows you all the holdings. I matched it up with what I saw in Holdings Channel, and it is accurate. So you can do this for yourself. You can look at the Form 13F, compare that to the holdings on that website there, and you can see it for yourself. It's just a little bit easier to use that other website, but both work. This applies to any central bank and, of course, investment companies and what have you. So before I move on from this topic, essentially what I'm trying to make the case of is that the economy is doing terrible for most places. Look at Europe, it's falling apart. There are different reasons for these things happening, but essentially that's what we have. And then you look at the turmoil in the financial markets, maximum amount of debt, which I'll get into in a moment. And the only thing that's there supporting it is central banks printing money out of thin air and buying up all these assets, whether it's in the fixed income category, whether it's equities, whether it is garbage toxic assets, ETFs in the case of Japan. And we don't even know what they really do behind the scenes. This is just the information that's public. And of course, they get incentives. In some cases, we have that confirmed, to buy certain assets. Incentive programs. Do you get an incentive program? Do you get a nice little discount if you buy shares of Apple? No, that's not how it works. But the central banks, of course, they make the rules. So this is the information that I wanted to get to for this video. It's very important. I'm going to move on into this and I'm just going to hammer through these very quick. Student debt significantly outpacing wage growth from the year 1990 to 2015. Look at this. This is the wage growth? No, of course not. That is the median debt. So the amount of debt is expanding over and over again. Every year it seems to get worse, but the wages remain stagnant. And that's just the way it is. And that's even using fake inflation. Imagine if they used real inflation, how bad it would really be. Auto loans owned and securitized 2002 to 2016. Lo and behold, an extreme increase. And even if you take it from 2002, we see the same thing. Record $30 billion jump, $1.1 trillion in a short period of time that has been added to the amount of debt. Think about that. $1 trillion. That's just in this one category. $1 trillion. Reminds me a lot of the student bubble and all the other bubbles that are out there. Percentage change in home ownership rate among different age. What we're seeing here obviously is that the people who are under 35 years old are not going to be able to afford homes. This also affects to a drastic degree those 35 to 44. This is what I would say is going to happen. More people are renting. You see people renting their homes. You see people renting their cars. And, with all these sort of companies that are around, and they have them in, let's say, Toronto, but I know they have them all over the world. It's sort of a quick car rental company where you may only need a car for a few hours or perhaps 1 day or so. So you would then quickly just rent the car, bring it back to its station, and that would be it. Because it's not worth having a car. The parking lot is too expensive. The car is too expensive. The gas is too expensive. And simply you don't need it all the time because you live in the congested and condensed environments of the city. So you wouldn't need a car. Well, that's exactly what is occurring at this time. I see less and less ownership. You're seeing even the Apple has the renewal program, which is basically you have the rental of the phone. You pay a monthly fee and you get their phone, but it's really a rental. So everything is becoming a rental these days. And it just shows you that, if you like that, that's totally fine. But I just believe that this is being done as a result of people not having the ability to purchase it. That's generally the way it is anyway. Moving on, distribution of wealth in the US, 1917 to 2015. No surprise here that the top 0.1% is owning more and more and more, and those in the bottom 90% own less. Doesn't surprise me at all. Share of the labor force working in agriculture. This is since the year 1300. So some interesting calculations here, but essentially what we have, no doubt, is a heavy decline that has been taking place year after year after year. It's a growing trend. And now there's essentially nobody working in the agriculture industry. In the Great Depression era, you had a significant amount of people. And if I try to see where England is here during Great Depression times, I would say approximately 10 to 15%, somewhere around there. And you look at the other statistics I've seen, Canada and the US, seems to be around there, maybe a little bit more, 20% or so. But essentially what we have here is a problem because people are not self-sufficient. If there is a crisis, a natural disaster or a financial crisis, people begin to suffer immediately because they do not have food security, and that is extremely dangerous. And last but not least, I see violence increasing. I see poverty increasing. I see all sorts of different violent crimes, homelessness, Everything seems to be getting worse. This happens to be Baltimore homicides in a short period of time increasing. This line it's showing you here is from 2014 to 2017. That's annualized, of course. And Baltimore is just one city. I watched some drone footage of Baltimore and Detroit, and it is amazing to see it. I mean, it is just terrible. Now, does that mean all of Detroit is terrible? All of Baltimore is terrible? No, there's areas. Every town has their own good and bad areas. But when it makes up such a large percentage of the cities and it gets worse and expands, you know there's a problem. And then you see the crime rates increasing dramatically. And that is one very good indicator to see how it all happens. One year things are just fine, and suddenly people in that city where they grew up in, it just isn't the same anymore. Well, if you found this video informative, then please give me a thumbs up. If you'd love to see more images of Janet Yellen being held and caressed by Ben Bernanke, where is his hand? Oops. Then give me a thumbs down. Last but not least, if you found the video informative, I know you will find my books, The Money GPS, and my new release, Global Economic Collapse, even more informative. My first book talks about the 4 asset classes and how to profit from it, whereas the new book touches on these familiar subjects but gets into things like becoming self-sufficient. I believe it's very crucial. That's why I really put a strong emphasis on that in my new book. So if you want to look through them, you can always go to Amazon. They have a look inside feature which will allow you to flip through the pages of these books to see if you like them. Now, once again, I wanted to mention there's been much interest in my audiobooks, and I have released the audiobook for Global Economic Collapse. You can check that out at my website, themoneygps.com. Take care.